staff?
For staff, any staff members.
When you say social media,
MySpace, Facebook, Twitter, things like that. Except what is acceptable between any staff member and student.
I think the policy that we use is we go over areas that they need to be careful and we make recommendations to them.
So like a verbal, nothing,
Yes.
no policy in play whatsoever.
no, I mean, in school here,
Yeah, but on their own personal.
right, on their own, we can't monitor what they do outside of school.
When you opened up section E, number 2, in your policy, which is sexting, do you provide cell phones for staff?
For administration, we do.
So that would actually, sexting, when the teachers and staff sign this, that would only be considered the administrators then, who you give cell phone use to? Because sexting would be cell phones, so that would be considered personal.
I don't know what that says. What could you read it to us?
Sexting, which includes, without limitation, processing, sending, distributing nude, sexual, explicit, or sexually suggestive pornography, videos, or other visual of yourself or another person.
Extend to all school, I mean, that would extend to all school-owned equipment, yes.
That would be all school equipment
So
only,
whoever has a school-owned cell phone, that policy would.
would go into play.
Or if they did it during school hours.
Okay. So I guess what I would like to do is I would like to request that the board look into some form of a policy for what is and is not acceptable. As far as, say a parent comes in and says to you guys, such and such, whether it be a student going over the line to a teacher or staff member, or a staff member crossing the line, I would like something to be in form that states, no, that is not okay, and you cannot do that.
Isn't that illegal?
Well,
No, because every other district I've looked into has it.
Are you talking about outside of school?
I'm talking outside of school. Like, I'm talking Bay City has it, Saginaw has it,
No,
I've
When
checked.
the people do the sexting inside of the school hours or equipment or outside school hours and their own equipment.
No, I'm saying that the other districts in the state have policies stating, a policy that you cannot say, put on a 14-year-old girl's Facebook if you're a staff member, wow, you look gorgeous today, or things that one may find inappropriate.
Yeah. I mean, we would do that anyways. I mean, that's not,
Well-
I guess I'm not following what you're asking us to do, because if someone was to make an inappropriate comment to a minor, I mean, it wouldn't just be the
You would turn it over.
school board looking at that, it would be a police agency.
But there's nothing in question, though, say, to protect a staff member, though, either then, if a student crosses the line, because they're considered a minor.
If a student was to.
Cross the line and say something, over the internet or Twitter, Facebook, MySpace, and that crossed the line. We have nothing to protect either the student or the teacher in the matter of social media whatsoever.
Can I give an example real quick? I know a lot of your high school teachers right now, and I can't speak for necessarily a lot of the middle school teachers, but a lot of the high school teachers give their personal cell phones out to their students because it's 8 o'clock at night, studying for a test, you want to get a hold of your teacher real quick, it's okay, just text me, I'll help you that way. They're extending themselves out that way. They're also giving out their personal cell phone now, and we've already had an instance in this school district here recently where you had a teacher-student texting issue, and it went over the lines where it should have been, and both teacher and student should have been held accountable. And I guess the point is, there's no policy to protect either one of them that says you don't want to discourage the teachers from wanting to help out their students and stuff, but if you guys aren't providing those cell phones for all your teachers, and you can't apply that policy to them unless it's your district's cell phones or equipment, correct?
Why are we just talking cell phones here?
Oh, we're not. She actually
I said
referenced social
Facebook
media.
and
But you
in my
opened a
space.
policy already, there is a policy on
Because some,
texting.
well, but you're talking about teachers are giving out their cell phone numbers to students for help or whatever. I'm just curious, that's all some teachers have, are cell phones, as far as, I mean, that's all a lot of people are going to nowadays are cell phones. So I don't know what, I know the sexting part you're talking about here, and if there's a concern about that, or if that's happening, then that's something that has to be addressed. But if we're just talking about teachers are giving out cell phone numbers to students, that may be their phone number.
No, I'm not saying as far as cell phones. I'm not trying to not have teachers and students have communication. I'm saying what is okay and what isn't okay. If there's no policy to follow, say I'm a parent who thinks absolutely not, a male teacher doesn't need to have my daughter on his Facebook. I don't have a daughter at that age yet, so there's going to come a time when it's going to become an issue for, like the three of us here. I don't agree with having a teacher having Facebook and my daughter on it, or sending requests. That's your personal life.
I think the issue here is we have policy to control activities within the school district. If they do inappropriate things outside of the school district, like at home, then we have laws of our country that take over then. The policies we have are only for in-house.
There's no law that states that a teacher can't say, hey, you look pretty today. It's not sexual harassment, it's not anything that's gonna be prosecutable. Is that a word? Prosecute, but it's over, I mean, if you have a parent that comes to you now and says, please read this, what does the teacher or the student have to fall back on that will protect them from getting potentially either verbal, written write-ups or fired?
That would happen now. I mean, if somebody came to us and the high school teacher had said, you really look pretty today in your dress, I guess we would give it to Mr. Good, and Mr. Good would speak with the teacher, and there would be a record of it, but.
What if we had a student that was flirting with the teacher?
We can't put together a policy, and we discussed this a couple years ago, to identify every little thing that could be said or that could be offensive. Because once we start to define, we eliminate some things that could be, if it's not in the definition. So the way we've handled it is just as I've explained. If something was brought to our attention, then we would look at something that was inappropriate or potentially inappropriate, and we'd go from there.
That leaves a lot of gray area.
It does, it sure does, but it doesn't eliminate things that shouldn't be eliminated either.
It seems as though we Americans try to make a lot of gray area for a lot of things, and we have policies for things that are unexplainable. I agree with both sides of this situation. I think there needs to be something more than there is. However, just like you say, how far do you go with it?
What's the benefit of having teachers and students joined by Facebook? Like, why would a teacher want all their students on their personal Facebook page?
I could answer that. I was starting to use Facebook when I retired with my FFA kids. I was using it for notification for meetings. I was getting things through Facebook that would, information kinds of things.
Okay, and
It wasn't a social thing, but yet it was. I mean, I see a Facebook person in the audience that was a student of mine, that when she was a state officer and a chapter officer, we used it for that kind of thing. I mean,
okay, and I understand that, but weren't you ever concerned about the students getting access to some of your personal photos and personal information?
on Facebook,
Well, people put a
you
lot of
have
stuff on
to,
Facebook.
anymore with that stuff, I have found out that there is, if you put it on Facebook, it's out there for the world to see.
One of the-
And it's whether it's students or adults or whatever. If a person puts something on Facebook, it's there for the world.
Right, exactly, and you should have that. But one of the things that the other districts that do have policies regarding teachers and students' interactions via social media, they have done, is they have prohibited them on their personal Facebook page, but they have told them that they can have a Mr. So-and-so teacher page or a Mrs. Teacher's page. So that they have a separate page for their personal life where they can put their photos of their family reunion, and they can have all of their family members and their personal friends on there. And then they have a teacher Facebook page that they can link with all of their students so
But
that
if
they
you
have
don't,
that
if you don't
benefit.
put a privacy, if you don't have the right privacy setting on your Facebook, anybody can look at whatever you've got on there. And I mean, I don't, we can't say that teachers can't do that just because they didn't put a certain privacy level on their Facebook page.
I'm asking for a higher standard. I mean, I've talked to Bay City Central High School. I think that we are just below a different standard of what is acceptable and what is not acceptable. And I'm not willing to sit back and just say, well, all right, let's just not do anything to try to protect either the student or staff, for that matter.
Did you get written copies of these?
I sure will for you.
Sometime before the next meeting?
Yep.
Or you can just tell us what school districts you got them from and.
Fort
I mean,
Wayne,
it's
Indiana was
something
one,
last
Bay
time-
City, it would be Bay County, all of the Bay County Central, Bangor Township, and it would be, Saginaw Township. Talk to my aunt who is a teacher there. They can't even have Facebook. Some schools in the state, you're not even allowed to be friends with your students. I'm not trying to say, let's cut all contact from students to teachers. What I'm saying is what some are finding acceptable, I am not finding acceptable along with other parents.
If you could forward me a copy of this, I'll look at it.
Yeah, we can look at
Look,
it.
see what their wording is. I mean, we might have something that's similar.
But you just said something that concerns me. If you're finding things that you believe are unacceptable, that a staff member is engaged with a student, then I would hope you would contact me or the building principal. Because whether there's a policy or not a policy doesn't mean that we would not act on that.
Some parents,
The fact that there's no
what they
policy-
find acceptable though and what I find acceptable are two different things.
Well, but that's okay. I mean, then we would need to conduct an investigation into that. So, at some point, the principal or myself would have to decide if that crossed that professional line. But for you to have said that, let us know.
On the other end of it, though, I think it's very important to look at where this isn't just a student issue. You know how
Right.
many students are flirting and putting themselves out there to teachers?
Yes.
And teachers are, they're just as much they're actually probably more. I mean, going to Mr. Good and saying, here, I gave my personal cell phone out to help these kids. And this girl or this boy or whoever won't stop at this point. And I don't understand. I guess that's what we're looking, if you guys had a policy to come back on, just like you opened it up with the sexting thing. If only your administrators have your personal district cell phones, and if that's what that applies to, those people aren't texting students. Your teachers are. And your students are texting your teachers. So, and like you said, using their personal avenues to be able to open themselves up like that. But if they're gonna open themselves up, they should be protected by this board.
We'll look at it.
Thank you.
Thank you.
Do you have some samples of those, did you say?
No, I'll have to get you guys some print off and I'll bring it to the next financial meeting or whatever's next.
Or send them to me before, and that's fine.
Yeah, I'll email them to you.
All right, thank you.
Anyone else? Okay, we'll go to reports and information. Board correspondence, if any. I did get a couple of letters from students concerning the senior trip. I think all of you got those?
Yeah.
In the packet. Don't see any need to read them here. Unless you want to particularly discuss them if it's a blanket. Okay,
Are you aware of the background of these?
no.
There was a classroom assignment given in one of the classes to write a persuasive letter
Okay.
in our communications classes, and the students all had to write a persuasive letter of some kind to someone. And these two students took on that topic and sent us the letter.
Okay, no, I didn't know that.
Yeah.
Okay, next is the 2012-2013 audit summary. Rhinelander Fitzhugh, Mr. Quimby, David Quimby.
Well, good evening. It's really my pleasure to get in front of you once again. And hopefully you can read in front of you. A lot of the materials in front of you are up here, so hopefully just go along with this. What we do have in front of you is the presentation I have up on the screen. We also have the bound audit report, as well as also some correspondence, but a lot of that we'll get to as part of the presentation. In addition to that, just to let you know, we had a very good discussion, quite a lengthy discussion last Monday night at the Finance Committee meeting to go over a lot of detailed questions in that. So even though I answered those questions, with that in mind, if there's anything that do crop up once again that we've addressed last Monday, I'm happy to address it again. So let's get right into the presentation. Okay. At the outset, what we're planning on doing is part of the packet that I have relates to the main audit report that I talked about, the bound hard copy report that's in front of you. Just to let you know that I didn't put a slide in here that relates to that, but the financial statements technically are your financial statements. We're the ones that actually are issuing an audited opinion on it. We help put them together, but in essence, the main reason why you hire us to come in is not just to prepare the statement, but actually to issue a formal opinion on it that is fairly presented. And we'll get into that in a minute. In addition to that, we also have what we call a single audit report, which is in the back of this bound report, and that relates to your federal program dollars, and we'll address that a little bit later on. Audit communication letter, that really relates to the governing board, and that's actually that loose leaf letter that's on our letterhead. We also have a data collection form that has to be addressed. That has not been completed at this point in time because we noted at the Finance Committee, the Federal Clearinghouse hasn't approved the form. It's supposed to be out in August, and they're telling us now it's going to be out in late November. So we will wait and see on that one there. I guess it's your federal tax dollars at work, and I guess that's the situation there. But in light of that, I did contact the state of Michigan Department of Education, and they will accept the entire amount of the packet electronically sent in without that form. So as soon as the board approves that tonight, then we'll be able to submit that and make sure that there's no issues with state aid for this year. And also on top of that, we also have a capital asset depreciation schedule that we maintain on behalf of the school district.
I was at the meeting last week when you talked about that, the form's not ready. I'm assuming that when the form is ready, like you guys will fill that out for us and send it to whoever it has to be sent to as part of our audit, or we don't even need it.
No, good question. What happens with that clearinghouse? That's truly an important federal report. I mean, they receive a hard copy of this report, but also on top of that, there's an electronic version of this now. And when we'll prepare this, but then what happens is once it gets submitted, it gets sent to both our firm as well as also the administration for certifying that the information is valid and appropriate. So once both of that happens, then it actually officially gets uploaded and approved. So what I'm getting at there is late November, along with all of our other school districts we work with that are going to be right in line with this, is that we'll put it together, we'll transmit it, but it'll come back to the business office here as well. It'll also come back for me for my final approval electronically. So there is a special approval process. Okay, next slide. I talked a little bit about issuing an opinion on the financial statements. That's in that first bullet point. We call it unmodified opinion because there's what they call no modifications. There's no except for issues or things along that line. In essence, it addresses that the financial statements are fairly presented in accordance with our US GAAP. So it really meets our standards. Also, what we're going to touch on number one, and I think it's important with the school district, is fund financial statements. Really, that's the driving force. That's your current resource activity, so it's very important that we address that. The other one is we have a district-wide statement. That gets a little confusing, and we have to combine all the funds together, and I touch on that briefly, but I don't want to confuse that too much. That's a different way of looking at the school district. And actually, in the front of the report, there's a management discussion analysis. That was new about maybe 4, 5, or 6 years ago when they made some changes to how the reports are supposed to be put together. And in essence, that actually comes from the administration. There's some key aspects that have to be addressed, but in essence, there is some latitude on some of that, and that's in there. So that's all in the front of the report as well. All right, just summarizing activities as it relates to the 4 funds that you have that are the significant ones. And we'll get into more detail on each one of them. The general fund, if you look at the first column, and you see the second column, and then the change, either increase or decrease. General fund balance now, as of June 30th, 2013, the end of this year I'm reporting on, was $1,154,000. The year before, the fund balance was $1,279,000, so there was a roughly $125,000 decrease in fund equity. Cafeteria fund was about $121 at the end of this year, about $120 the year before, so it was about a $1,000 increase in that one. Debt service funds are kind of a function of property tax revenues and debt service, so there's kind of an ups and down, but it just depends on the capturing, and that's been calculated out. But actually, in the 2005, there was an increase of about $78,000, and then the 2008 one, there was a decline of about $7,700 in total on that one to get to our numbers. Now let's get into some of the actual numbers.
Could you back up just a second?
Okay.
I want to make sure I've got this correct in
You're gonna work on me now. I gotta work this
previous.
All right. There we go.
Okay, when you have a fund balance up there of June 30th, and it took me a while to figure this thing out. It looks like we've got $1 million sitting in the bank, which is not true. A lot of this money is already owed out in salaries and wages, is that correct? I mean, this is a snapshot of what's sitting there at this point on June 30th.
Okay, let's talk about that to make sure. It's not physically cash, okay? What happens is, and we'll get to that in the next slide, but when we talk about assets, in essence, there's going to be cash that you do have in the bank and investments. But then there's balances that are actually owing to you as of the end of the year. We'll count them as income. And then there's also on the liability side what we owe. There's balances that we have to pay out, and then also we have contractual, like teachers and fringe benefits that go along with that too. We take the difference, that's what comes out to fund equity. It's almost as if you liquidate everything, you could kind of convert it to cash, but it's not really cash at the end of the year, okay? If we get to the next slide, it might help out a little better. Okay, let's take a look at the balance sheet. And what I'm going to do is actually, in light of that questionnaire, I'd like to actually, let me get to my slide. Turn to page 16 of the audit report. I want you to for sure see exactly what the numbers are. I know it's not up on the screen. Okay, that is our balance sheet as of June 30th, 2013. And if you look at the general fund column and you work your way down, as you can see, those total assets are approximately $5,664,000. But if you look at the report here, how much of that is roughly about $2.7 million worth of cash and investments. Then also there's about another almost $2.8 million worth of we call it due from other local governments. What is that? State aid monies that are really collected in July and August that really are accounted for as revenue at the end of the year. I mentioned this last week that in essence when Proposal A started roughly about 20 years ago, and yes, I was there, that the situation was is that you collected all of that cash, that $2.8 million by the end of June. Now because of state issues as it relates to cash flow, they pushed it out to July and August, but you could still count it, okay? was not really cash, but actually within 60 days it was actually collected, okay? When you look at your liabilities, you're seeing the liabilities of roughly $4.5 million. Now, what is that? Once again, you go back to page 16 and you look at that. You can see down below, there's really two large items. First off, you have some state aid borrowings. That's actually roughly around $2.4 million. Some of that's paid off within a short period after the end of the year, and the other one was borrowing for the up-and-coming fiscal year. Then also on top of that, you're looking at roughly $1.8 million in accrued payroll. What is that? Payroll that was actually earned as of June 30th but wasn't paid until July and August for your contractual employees, plus their fringe benefits that go along with that. So it gets a little complicated in that sense, but we have to look at what was actually occurred at the end of the year, and then we have to incorporate whether it was actually owing to us or whether we actually owed the other dollar amount. So when we subtract those two amounts, that's where our fund balance comes back to that $1,154,000. Having said that, let's talk about how do we get there. Our total revenues and transfers as for the entire year, roughly $19,230,000, and we'll get to that in a minute about the breakdowns on it. Expenditures $19,355,000. So we take the difference between the two, and that's how we came up with a $125,000 reduction, and then we're at that $1,154,000. Okay. All right. Let's start looking a little bit closer at what it consists of. Actually, turn to page 18 of the audit report, just so you have it in front of you. If you remember Proposal A, what they do is they look at it and they say, okay, for every child that's here in school, roughly, let's just round it off, roughly about $7,000 is for every head that walks in the door. Now, that's a mixture of both property taxes and state aid, but it's a mixture of both that comes to you. So it's just a matter of what school districts are. Some have higher percentages of local, some have lower. But in essence, your largest percentage is, of course, state shared revenues of about 59% of your total general fund. If you look on that page, you look under the general fund under state sources, approximately $11,300,000 worth of revenues are coming from state of Michigan. Okay. If we look at the other side, what's our next highest level is going to be our local sources, and what is that? Property taxes. So if you look in that column, you look at that first number, roughly about $6.2 to $6.3 million of that 34% is local property tax. Okay. And then the line share, and then the portion of it that's left over is really state sources, and we'll get to that in a minute. I like this as it relates to expenditures, because what happens is, if you look at the bottom of the 2013 column, you see that $19,355,000. That's that number we talked about before. Let's just talk about what does it consist of. In these reports, they always talk about instruction and support services. I like this because it talks about salaries and fringes. It gets right to the classifications. So if you look at actually salaries and fringe benefits, I usually like to combine both of those together into percentages up above. And really, you're looking at roughly about 84% of your general fund is individuals, staff, and realistically, that percentage is fairly consistent with what I see. And some are actually even higher depending on how they're leveraging and how they have staff, and some could be a little bit lower, but you're fitting right within the realm of where we see most general funds are at. As you also look down below, you can see from last year to this year, you actually cut about 1.4 out of your budget in order to be where you're at. And that is actually probably about $200,000. It actually really should be about $1.6 million. And you're going to say, what do you mean by that, Dave? Well, in the fringe benefit area, you received an extra $200,000 from the state of Michigan for retirement. So what they did was in your state aid, they gave you the $200,000, and then they told you to pay it right back into the retirement system. So it artificially kind of inflated the fringe benefits by a couple $100,000. So really, you cut out roughly about 1.6 million out of your budget from last year to this year. Okay. I put this in as new. I think it's important that people actually take a look at this, because in essence, I have school districts that are drastically having some major hits within 1 year to the next, and as it relates to state aid, student counts. So these are FTEs. So I just looked at a 5-year trend to see where you're at. And really over a 5-year period, in essence, there was about 190 FTE reduction. Now, you can say, oh, that's 1 year, but look, if you look at the increments and then also base it on your foundation that would have been for each year for those kids, there's some sizable dollars that really had a major impact on the budget activities. If you look at the 5-year, if you would have said 2008 and 9 were next to 2012, 13, what I'm saying is the first year comparison to the 5th year, that 190 reduction, if you compare that, or if I can say that right, if you just multiply that by $7,000, you're looking at close to $1.3 million if it was just 1 year alone. This is over a period of time, so it's significant on the top line. And you're not alone. There's a lot of other school districts that are out there addressing these issues. Now we'll get into just some general items. Food service, like I talked about before, small amount of an increase. Fund equity is still a decent size at about $121,000, so I think I'm sitting pretty good with that one. The debt service funds, we still have some significant debt on the 2005, so that's why the buildup's occurring, because we're going to have future larger payments on debt service to address more principal, so that's why the impact of the increase on that. 2008, that's reducing down, and you have 1 more year worth, and then 2008 will actually be paid off in this 13-14 fiscal year, and then that'll be resolved. Any fund equity that's left over within this fund will be transferred over to the 2005 fund, and that's the normal process you usually have with the debt service funds. Now, if you remember, I talked to you about confusing you, but that's what I'm going to do now, because in essence, we talked about fund level reporting. Now what I want to do is just talk briefly about what happens to another way of looking at it. And this is in your report, so I have to address it. So what this does is it brings all the funds together, the lunch program, the general fund, the 2 debt funds, and it combines it together. And it addresses it a slightly different way. I call it a business model, because if you look at the expenses down below and you see a line item that says depreciation and amortization, there's about $1.2 million of expense on that. Realistically, you'll never see that at the fund level, because in essence, when you have a piece of equipment or a building or whatever, that gets fully written off in the year that you actually spend the money. But in this case here, this is kind of like a business, because if I have a building, it's going to be written off over a period of time, even though I spent all the money in the first year. So it's a little different look. So just to let you know, on this one here, there's approximately $22,455,000 worth of revenue if we combine all the funds together. On the expenditure side, or expense side, $22,338,000. So we look at the difference, there was about roughly $116,000 increase in what they call position on this particular model. I'm not going to go into a lot of detail, but in essence, it's different than if you compare it to the fund level as it relates to that. And most districts really just look at the fund level. This is really small. Now, this is the same information I had before that I just talked about, except this is actually in your audit report. And what it amounts to, and what I just need to point out to you on this one here, this report actually shows the expenses. If you see the expenses at $22,338,000, it starts off with that. What we do is we end up reducing down those expenses by the actual program revenues for the charges for services and operating grants to come up to a number in the far right-hand column. And if you look at that subtotal, you see there's a large number. I know it's quite small, but it's roughly $16,946,000, I believe. Every school district we work with, every municipality has that large negative number, because in essence, if it wasn't for property taxes that are general property taxes, state aid, that's general foundation dollars, just the general revenues, you couldn't operate just on charges for services and categorical grants and federal and state aid issues. So you actually literally have to operate off of that. And that's what their model is. To tell you if it's right or wrong, that's how you have to report it to you. Okay? Just a few other items. Remember I talked to you about those depreciation, capital assets, and that. I just want to touch on it briefly. If you look at the 2013 column, see capital assets, there's roughly about $44 million worth of value that's out there right now. That's been what we call capitalized, and we're writing it off over a period of time in that one way that we're addressing it, okay? So just to let you know that we keep track of that, we monitor that. That's not fair value. That's not what they're worth, it's what was invested in it, and then we're writing it off over a period of time. Okay. And then the depreciation, that's accumulated over a period of time, that's what we actually have charged off in the current year plus other years before this. Debt service, you actually reduce down actually your debt actually decreased by just under $1.1 million under the general obligation area. That was actually what you paid out. The other one, you can see that's Durant bonds. Those are actually state obligations. We had to reflect those as your share of that, but the state of Michigan was paying those off. So in essence, those are gone. Every school district in the state of Michigan has now have those paid off at this point in time. Okay. I've gone through the report, it just hit the highlights. Now I'm going to go into actually the correspondence and address it that way. So just to touch on a few items, we use our U.S. General Accepted Auditing Standards as part of any of our audits that we have. And then also because of the federal dollars, OMB Circular A133 that deals with reporting, how we actually conduct it, that's also has to be followed as well. So just a note to you on that. In addition to that, we also have other significant, what we call audit findings. The policies that are out there, there's really no changes from last year to this year. There were some slight standard changes that dealt with just titles and a few other things that were nothing significant to really bring to your attention. The estimates just deal with the depreciation that we usually charge off in that other reporting model. There's no significant difficulties during the audit that we needed to address with you. Corrected and uncorrected misstatements. What happened was anything that was, first off, there were no uncorrected adjustments. We call it adjustments. There was nothing there that we needed to report to you on that we left to roll into next year. So but we do report to you some significant or material adjustments we made, and we had a few with dealing with payroll, health insurance, fringe benefits, and also the due from other governmental units. So there were some large adjustments we had at the end of the year. No disagreements with management, and then we also received the representation letter that we just received today that related to all the correspondence and all the information that was disclosed to us was full. Now let's go into single audit and just touch on that briefly. What happened was because of the federal dollars you receive, and if you see part actually extend, if you extend more than $500,000, we have to do that special audit. And if you can see, the fiscal year was about $2.1 million. So if you think around that $22 million worth of value that we talked about a couple of slides before, roughly about 10% of your dollars that you're receiving are federal dollars, either mainly just passed through the state of Michigan. So as a result of that, we're required to address this. So we have to go through some special formulas, and this year we were testing the IDEA program, Title I and Title II Part A. So we tested all three of those programs there. And we gave our reports on internal controls and compliance as it relates to both the overall financial reporting, that's called government auditing standards, and also A133. And we addressed that within the schedule findings and question costs. We noted a couple items that we noted at the Finance Committee, and I just want to touch base on it. Let's skip the first one, we'll come back to that. During the current year, or actually the prior fiscal year, there was a software conversion that took place. Actually, that software conversion allowed activity for July of 2013 and also part of August of 2013 to actually be recorded in for the prior year. So it actually required some reconstruction. Well, the only issue, the main issue was that we came in and we had uncovered a lot of that issue, and we had to pull off and in essence wait for the software provider along with the business office to work through it. So with that in mind, we came back in September, and still there were some larger adjustments we still had to make. So as a part of that, we want to point out to you that was part of a finding that we addressed as it relates to internal controls for those adjustments that needed to be addressed. With that in mind, with those adjustments and also those corrective activities that took place, there was still a reliance on our financial reporting, not just to put it together, but to correct the books and make sure that it's all ready for actually being audited for our opinion. And so as a result of that, that's why I skipped over the first one to say the account reconstruction and adjustment was important, and that had an impact on the financial reporting because there was still a reliance on us. So,
As we sit here today, or as of June 30th, then those corrections and whatnot have been finalized, and our fund balance is the 1,154,000.
that is
as of
correct.
June 30th.
That is correct. You would not have a bound financial statement in front of you
If it wasn't.
wasn't for those being addressed. This is just to give the board a little bit of heads up, and I just want to point this out to you that I think it doesn't have an effect on fund level reporting in your budgeting, okay? But it's important, and I'm telling this to all the local districts, and we had a little bit of a discussion at the finance committee level. The school district is part of the defined benefit pension plan with the state of Michigan, okay? So in essence, there's pension as well as health insurance, health costs that are being covered for retirees by the state of Michigan. Because of that, the challenges is that fund is substantially underfunded. Okay. And as a result of that, we have a GASB statement number 68, Governmental Accounting Standards Board, that's what it is. That says actually for your fiscal year 2015, which is 14-15 year, not the one you're in right now, but the next one, we'll probably have to be putting in the information as it relates to what I call your piece of the pie for that unfunded liability that's going to be actually reflected in your financial statements. It won't affect fund level, and I'm not, let me put it this way, we talked about this earlier, I'm not going to be making the calculation. It'll have to be somebody at the state level that will be auditing that pension plan that will give each one of the school districts their piece of the pie for that liability. The only reason why I'm bringing it to your attention, because it doesn't affect fund level in your budgeting, is that we do not know if the bond or the rating agencies will take that into account when it comes to if you're going to do any borrowing as relates to maybe charging you a little higher interest rate, a few other items like that. So we're not quite sure where this is going with it. The other side of the coin too is that if a school district happened to close, and we had one down in Saginaw County, this liability technically wasn't absorbed by that school district. It was actually absorbed by all the other ones out there. So there's some issues out there where we're just not quite sure how this is going to react or how this is going to work out. But we're just going to let you know that at the outset for the 14-15 fiscal year, there's going to be more disclosure as it relates to it. Let me even tell you more that's more complicated too as well. Over the past couple of years, I have a spouse that's an educator. So I went through the elections of all this that took place as it relates to your health care and also your pension. I think this was before Christmas. And to make a long story short, our disclosures on pension have gone from probably 2 years ago, went from 2 paragraphs to now our pension note in the statements have gone to 8 pages. Just for the fact that all the different options and all the different things that have taken over. And then actually there's a chart in there that addresses before February 1st and after, before February 1st and before October. It is very, very convoluted as it relates to each employee and what is their requirement based on their elections. So it is a very complicated issue, especially in the business office.
Dave,
Yes.
I don't know if I asked this last week or not, but is the state saying that they're going to keep track of how much retirement is being sent out from the state in the name of the West Branch Rose City area schools? I mean, is this where they're going with this?
I don't think that that's what they're really looking at as it relates to cash in and out. I think what they're probably looking at is how are they allocating